Look, people, here's the truth. Every coffee you buy, every computer you have to purchase, every mile that you drive, they could all be saving you money, but instead, the way you're operating currently, you're not doing that. It's just burning cash away. Welcome back to the channel. I'm Harrison Patton, founder of Kaizen Accounting, where we provide business owners all of their tax and accounting services with our outsourced model. In 8 minutes, I'm going to give you the tax strategies that the smartest of business owners are using to help lower their tax bill and help save money on everyday expenses. And I want that for you as well so that you can succeed in your business. So let's get to it. So here's the truth. Most of you are overpaying on taxes because you're not seeing the game clearly. You purchase a latte for $5, you purchase a computer for $2,000, you're paying hundreds of dollars a month for your phone bill. But what you need to understand is that's tax savings that you're missing out on. The IRS tax code, via section 162A, says that anything that is ordinary and necessary in order for you to run your business and produce revenue for your business is allowed to be a tax deduction. Now, this opens up a little bit of gray area, but that's what I'm here to help you navigate through. So think of all the personal expenses that you have that are used in your business and help you run your business. Now your brain's probably thinking, what are things that I do every day that I use to boost revenue for my business that could potentially be a write-off? So let's get actionable with this and look at specific examples that you should implement into your life and into your business to save you money. My first recommendation is stop thinking personal versus business and rather look at life as one thing. Now, this does not mean commingling funds. Let me make that clear. Commingling funds is not smart and not something I recommend at all. But let's look at things that are personal and business that can be combined. If something is used partially for your business, one thing that's cool about section 162A is that it allows for partial deductions on your business based off of the business use of whatever the expense is. For example, your phone and Wi-Fi. You're on X messaging potential clients, you're marketing, and you're using your Wi-Fi to zoom in on clients and have client meetings. Say that your internet bill comes out to be $120 in a month. If you're saying that, a reasonable estimate for your business use is 60% of your internet bill, then that could be a potential $96 write-off every single month. Now, that doesn't sound like much on the face, but if you have a $120 phone bill that you use 60% for business, and then your Wi-Fi is another $70 that you use 70% for business, that adds up over the year to be around $1,750 in a whole year. And that's just getting started. You can start branching out into other things and think, what else could I be doing this for? And it really starts to add up as the year goes on. The biggest shift that I've seen in working with people and talking to different business owners is shifting from whining about your tax bill to thinking, how can I make this tax deductible? Now, it's very key with section 162, as it is with any tax deduction that you're trying to take, is to make sure that you're logging it. You must keep evidence of why it has a business purpose. Once again, it doesn't sound like much at the beginning, but as you continue to accrue and you continue to accrue, it really adds up to be huge tax savings in the future. So let's get to the next point. So next up, what's something else that you could deduct? Your house. So that spare bedroom that you use strictly as an office and never really for anything else? You can actually use that as a tax deduction. It's one that I love for my digital nomads. So this is done through IRS section 280, which says that if you have a space in your home that is sectioned off from the rest, that is exclusively used for business purpose, you're allowed to deduct that portion off of your rent. Once you measure your apartment, let's say that 10% of it is dedicated solely to business use. And once again, it must be exclusive and blocked off from the rest of the house. If your rent's $2,000, that's $200 a month that you are able to take as a tax deduction at the year end. That's another $2,400 reduced off your tax bill at the end of the year. And once again, you don't need a fancy space to do this. All you need is a space that is exclusively and regularly used for business use. And once again, it's important that it is exclusive. I know I've hammered on that several times already, but I've seen people try to say, hey, my dining room table is where I work, so that's my home office deduction. But that doesn't work. You can't turn a dining room table into a home office deduction. I've seen people get very creative, but it must be sectioned off from the rest of the house and exclusively used for business. So the IRS allows you to write off business travel, so airfare and even ground transportation like Uber, and also lodging, so like hotels and Airbnbs, if you're traveling for a business purpose. So what does that look like? So one thing that when clients and people I'm working with are setting up LLCs that I make sure that they get done with their attorney is that they set up a board of advisors. This is one of the steps to help protect the corporate veil, which we'll discuss in another video. But they set up a board of advisors, which will hold annual meetings. You can have them annually, you can have them quarterly. As long as it's not getting excessive, you can have meetings. These annual meetings help employees and advisors stay informed on the happenings of the business and, the decisions that are being made, the profit and loss, all those fancy things that we love to discuss as business owners. So one strategy that you can do is you can plan to hold your annual or quarterly business meetings with your board of advisors in a place that you want to travel to. The key here is that you substantiate why this is good for your business and will help bring in more revenue. The key words that are mentioned in the tax code are suitable and beneficial for business operations, which once again leads into a bit of a gray area, but it allows for a lot of wiggle room so that you can take advantage of this. Once again, I don't advise to take advantage illegally of the tax code. I want everything by the book. And they allow for a lot of things because they want to promote economic growth. So if you're going to do this, a word of caution is that you need to substantiate everything. So you should keep proper documentation of your whole trip and why it is beneficial for your business. You can't just take a trip and say, oh, this personal trip with my family is instantly a business trip. Now there's strategies where you can put your family on the board and, find ways to do that. But it's not just a flip instantly just because you say it is. You need to keep proper documentation to be able to substantiate it. I hope this video was helpful. I think it's very beneficial to see business owners and individuals shift their mindset of changing everyday expenses to being a burden to looking at them as tax savings and future wealth generation strategies. Now, I do say the tax code is a bit of a maze. It is 5,000 plus pages, and not everybody has the time to look through it. So if you're looking to upgrade your tax strategy, you can click the link down below where you can book a meeting to see how my company could help you on your tax savings journey and help to hopefully run your business more smoothly and help to ensure your long-term success and growth as a company. So people, take control today, start taking action and implementing strategies just like these and many others, and begin the wealth generation journey. I'll be dropping more videos like this here in the future, so be sure to like and subscribe so you can become a tax-free millionaire. I hope you enjoyed the video. I'm out of here, people. All love. HP out.